Hi, good week to all. This is Calvin here again. Welcome to this week latest weekly outlook on the weekly technical outlook on the major stock indices across the globe, where I'll be covering the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 indices for the week of 24th of Jan to 28th of Jan. So before we start, let's take a look at the disclaimer slides first. Okay, so before we jump into the latest trend buyers and the key levels to watch for this week, let's take a quick look at the momentum analysis across the globe from US, Europe, all the way to Asia. So as y'all could see that last week was another bloodshed week for the US stock market, which on the average, if you look at the major benchmark indices, they have declined 3 consecutive weeks in a row. So last week was pretty bad hit across the board for the US major stock indices. The worst hit was the Russell 2000, which is the small caps stocks, consists of small cap stocks down by -8%. Secondly, followed by the Nasdaq 100, which is down by -7.5%, and around 5.6% loss for the S&P 500, and the Dow Jones Industrial Average has a lesser magnitude of a loss at -4.5%. So that actually explains the reason why, if you look at the last 3 weeks or so since the start of this year, this very dramatic fall in the major US stock indices has been primarily been hit by the small caps company, which is Russell 2000, as represented by Russell 2000, and as well as the heavily technology and growth weighted Nasdaq 100. The reason why is it so? Because of the fear of this liquidity squeeze that is being kind of set into the marketplace in terms of sentiment over the fears of a more hawkish Federal Reserve. So I'll talk more about that, the sentiment towards this liquidity tightening scenario, and how I actually gauge it by in my Q1 quarterly outlook, which is actually on this Wednesday. Okay, so later I'll share with you how to actually register for the link. There are actually some seats available. So that we'll actually discuss further during this Wednesday, all right, in my Q1 quarterly outlook. So, but what's interesting to highlight is the outperformance of the prior underperformer in Q3, Q4 last year, which was actually the China-related markets, the Hang Seng Index, as well as the Hang Seng Tech Index. So, oops, sorry. So one of the reasons over here is that the last Q3, Q4 fall was actually due to this very dramatic, we call it sell-off, and sentiment has been weak, kind of triggered by, I would not go into greater details, is actually the state top policymakers on their, we call it, clamp down towards the private sector, and most importantly towards the platform technology company, which is the China big tech stocks. So, but however, in the last 2 or 3 weeks or so, if the start of this year, or in fact the year-to-date performance so far, the Hang Seng Index, the Hang Seng Tech Index has been actually outperforming as well. So, can they outperform further? The most question we ask ourselves for this quarter is all this I'll be covering in this coming Q1 outlook. And so there's actually a rationale behind it, why they're actually outperforming the rest of the world, especially the US benchmark indices. So let's take a look at the raw momentum, we call it analysis, on the Hang Seng Index and the Hang Seng Tech. 2.39% last week for the Hang Seng Index, pardon me. The Hang Seng Tech Index is at 1.76%. So if you look at the 4-week average, is 1.27%, at 0.43 for the Hang Seng Tech. And if you look at last week performance, actually surpassed the 4-week average. So in terms of the difference, right, we're actually seeing kind of it's something like a rate of change. We start to see what I call a pickup in positive momentum for the Hang Seng Index and the Hang Seng Tech Index at this juncture. So the one that is having a loss as well was the Nikkei 225, that -2.14%, which is much lesser compared to the US stock indices, which I would say consider that they're actually at least not too bad. And the German German DAX index is at -1.76% as well. So all in all, if you look across the globe right now, due to this fear of this liquidity tightening, we call it feedback loop that's being set in place on the US stock market, it starts to trigger this kind of underperformance versus the rest of the world. Okay. Now, very quickly, let's take a look at the weekly performance of the breakdown of the 11 sectors inside the S&P 500. So so far, yes, last week was a very bad week. All 11 of them are in the red. The one that's actually slightly outperforming is actually the energy. So there are actually various some energy stocks inside the energy sector is actually showing positive performance that allow it to actually have a less than 1% loss for last week at 0.7%. So I actually highlighted in my social Twitter feed this Monday, which is today, pardon me, today, on the very interesting performance of the energy, which is oil, which is related to oil. So actually, oil prices is actually helping the energy stocks right now in this juncture, and also oil prices didn't actually collapse with the U.S. Stock market. Okay, number one, due to actually a supply issue for the oil market, and also there are some geopolitical concern as well right now that actually supporting oil prices. So the second one will be the defensive sector, which is the consumer staples at positive negative 1.34%, which is lesser, and followed by utilities at negative 1.43%. So at we highlighted earlier is that the technology sector is pretty weak, negative 6.11%. Even the financials is actually kind of held a fort right this week as well at negative 7.38%. This the reason why due is actually due to this yield curve spread between the 10-year and 2-year has started to decline again, right, in the last a week or two or so, 1.5 week or so, pardon me. So now the next key thing we ask ourselves that yes, S&P 500 or the in oil supply has already declined for 3 consecutive weeks. So after being declined for 3 consecutive weeks, is it potentially now we're coming to the stage of capitulation, at least in the medium term? We're talking about from a multi-week perspective, where we could see at least a kind of either in the first step a counter trend rebound to actually retrace this last 3 weeks of significant decline, at this moment. So to answer that question, we can take a look at this intercorrelation between the VIX, which is a measurement of it's actually VIX is a volatility index that measure we call it fear and greed. So very quickly, before I touch on the key levels of VIX, right? If you start to see a VIX level that is very high, that means it represents there is a certain level of extreme fear relatively that is being kind of priced into the market. So once things has people or market participants are fearful, there is a possibility that a capitulation will take place. That means, i.e., what is mean over here is that the majority of the market players are actually selling. Okay, so selling. So this potential, we call it bearish, we call it a behavior by market participant could lead to a capitulation of the bears, which means there could be a potential at least a potential short-term recovery for the stock market because market is too fearful. And if the VIX is actually on the lower level on the downside over here, it could implies that market participants are very greedy. That means they are not afraid of risk, and they have a very high a degree of a bullish bias in the stock market, which could actually lead to a corrective decline because once every too many people are bullish, this is where any little thing that could actually upset the bulls could be triggered negative fall in price action pretty easily because there is too much optimism in the stock market. So what's interesting over here is that we could actually apply technical analysis by identifying key support and resistance on the VIX to actually gauge which are the relatively extreme fearful level and which are the relatively we call it a greedy level as implied by market participant based on the VIX levels index. So you could see over here the VIX now is coming very close to a key resistance at 32. So what is 32? 32 is in fact this swing high area of March last year and a swing high area of December, and also this descending resistance that is in place since 15th of June 2020. So if you look at it, once the VIX index hit this resistance level, every time it managed to form actually a medium term reversal point in the S&P, the bullish reversal point, where actually prior to that the S&P actually fell and hit this reversal point before it started to shape another leg of recovery on the 15th of June. Similarly, on the 30th of October 2020, 29th of January 2021, and as well as most recently on the 3rd of December. So right now it's actually fast approaching this 32 level again. So potentially over here, we still got to look for signs of because a kind of a candlestick formation that is a bearish candlestick to actually indicate to us that hey, once it hit this resistance level, there are actually signs of a turning for the VIX to actually starts to actually turn down from this 32 level, which could actually more or less increase the odds of a potential, at least a medium-term bullish reversal coming into the SPX. So now there's actually a possibility that we may have start to reach a potential capitulation point, at least in the medium term, for the S&P 500 after 3 consecutive weeks of decline, based on the intercorrelation between VIX and the SPX. So now, to actually kind of formulate this or potential capitulation move on the S&P 500 and even the Nasdaq, we got to take a closer look at the individual on its individual technical elements that is forming within the S&P 500 and the Nasdaq 100. So now let us quickly proceed to our CMC platform, where I'll be sharing with you the latest key elements that has emerged on the uh, Nasdaq 100 and the SPX 500. So now, very quickly, let's take a look at the SPX 500. All right. So on the SPX 500 here, this is the daily chart. So what we could see is that the major uptrend is still pretty much intact from the low of 23rd of March 2020. So this is the major uptrend that I'm referring to, a longer term uptrend. So what we could see right now over here is that this last three of price action has kind of hit uh, this 200-day moving average. It actually breached slightly below the 200-day moving average, but stopped at the previous swing high area of 4440 slash 44390. So this is a graphical resistance, graphical support level that confluence quite closely with the 200-day moving average. And what's most importantly is over here is I got to draw a Fibonacci retracement from the start of this wave. So this is the start of wave two, alert wave. So what I'm doing now is actually I'm trying to determine the current fall in the current fall that was actually seen in the S&P 500 in the last 3 weeks. Has it reached a significant retracement level that we could more or less determine that hey, that could be a potential end of a corrective down move. Okay, so what we could see here, project to the high. If you could see, last week move actually stock very close to the 23.6% retracement. Okay, over here, let me zoom in. Okay, this 23.6%, very close to this level. And if you could see over here is that yes, even though it starts to breach below the 200-day moving average, so this 200-day moving average, right? Yes, it's kind of a long-term moving average that everybody pays attention to. But if you look at the past action, we got to determine whether this 200-day moving average does it give very good signal that once it break through this 200-day moving average, price action indeed starts to follow another round of significant decline. All right. So in order to that, we can take a very simple look back, right, on the SPX 500. So if you were to look back over here, okay, during this period in 31st of May 2019, the 200 moving average so pierced through it, but thereafter it starts to shape a bullish reversal. It didn't actually have a negative follow through thereafter. And also at this point in time, on 7th of March 2019 as well. Okay, break through it, but or pierce through it, but then has a negative follow through thereafter as well. So based on this observation, this past observation on how it react at the moving average, at this 200-day moving average, and most recently over here we could see as well on the 26th of June 2020, it did had a daily close below this 200-day moving average, but the price action didn't actually follow through. There's no negative follow through. So based on this several past observation that I highlight to you all, this 200-day moving average, right, based on its past performance where price action closed below it, there are instances that price action didn't actually have a negative follow through thereafter. Okay, so there's a possibility that this could be appearing as well. Okay, but we got to find elements to actually support it. So one of the elements that I highlighted is the VIX. The VIX is actually coming very close to the key resistance of 32, where market is participants are getting rather relatively fearful, which could potentially lead to a capitulation, where price action could at least shape a potential medium-term recovery. And based on the Elliott wave retracement perspective, it actually fought at this 23%, close to this 23.6%, which is close to at least a minimum what I call a potential minimum end of a corrective medium-term wave four. We call it a wave corrective wave four down move, a bracket four. So what it means that if this wave four indeed ended, we could actually start to see a potential medium-term recovery where SPX could actually start to shape higher high from here. And if you look at the RSI, RSI is also coming very close to a support level at this 35%. Okay, so what's this 35%? If you look at this 35% in the past over here managed to help this rebound in 3rd of June 2019, where the price action actually did breach through the 200-day moving average on a daily basis, but they actually have a positive follow through as well. And previously, okay, this one is status over here, 2nd of August, 2019. So now it's coming very close to this level again, where we could start to see a potential, we call it overstretch downside momentum, as the RSI is coming very close to, it's at the key support and also at a corresponding key support, pardon me, and so coming very close to its oversold level. So now we got to zoom into the shorter term because right now we're talking about from a weekly basis. So in the shorter term, how does the momentum looks like? Does it start to shape what I call an overstretch condition where we could at least see a short-term rebound in this coming week? So let's zoom into the 4-hour chart on the SPX. So if you look at the 4-hour chart over here, what we could see over here is this down move over here. If you look at the RSI up oscillator has been shaping a bullish divergence. Okay, has been shaping bullish divergence. So what it means that price action start to shape lower low, but the RSI is not shaping lower low. Instead, it start to shape higher low, and this occurrence of higher low actually took shape at the oversold region, which could actually imply that this last few days or last 3 days of steep downside momentum is kind of overstretched, where we could potentially see a rebound. So what we could do over here is we could actually watch this key support level for this week on the SPX 500, which is the 43.90 level, which is actually the close to the 23.6% retracement, as well as the graphical support level that I highlighted over here on the daily chart. So this will be the key medium-term pivotal support that will be used for this week to actually have a potential rebound to actually retrace a certain portion of this steep down move that was in place since the start of this year, which is the last 3 weeks. So first resistance level to watch will be this 4,500 level, which is the former swing low area of 2nd of December and 3rd of December. If we start to see a break above this level, it could potentially see a higher move on the SPX, potentially to retest the next resistance at 4,600 levels slash 4640 level, which is this former trendline support, drawing from the lows of 1st of October, now turns into a pullback resistance. And as well, if we do the Fibo retracement from the last 3 weeks of decline, right, it actually store close to the key golden ratio at 61.8%. Very closely. So it's 4600 slash 4640. So however, if we start to see a daily close below 4390, then that potential that potential, we call it short-term rebound scenario, will be invalidated to actually start to see another extension of this decline to test the next support level at 4270 slash 4240, which kind of confluence also closely to the 1st of October swing low. Now, moving on next will be the Nasdaq 100. Okay, so if you look at the Nasdaq 100 over here, so we also start to see a very daily close, two daily close below the 200-day moving average. But what's interesting over here, it starts to stop right, not stop, it actually hit right at the previous swing low area of 5th of October and 16th of July, which has a graphical support at 14,380. So if we were to take the start of the wave 2 based on the Elliott wave and fractal analysis approach, and we project it to the all-time high that was recorded in 22nd of November. Okay, we could see it's actually paused. It actually hit the 38.2% retracement level, which is also considered as a potential level where that corrective wave 4 could may terminate. Okay, because this is the a potential terminal level, retracement level of a typical corrective wave 4. Okay, bracket 4. So what we could see, what it means over here is that it means this move over here may start to shape a recovery. All right, and if you look at the RSI now actually fall much deeper as compared to the RSI of the SPX 500. Actually went close to the below the 30% level, which is hit right at the previous level that was formed during the low of the major uptrend of 23rd of March 2020, around this before this major around this level here on the 13th of March region. Okay, so what it means that over here there is some significant support area of the daily RSI that the current RSI has now met, where previously after the RSI hit this significant support level, price action didn't actually fall that much and instead starts to reverse on the upside. And right now, the current RSI has really fallen to such levels, which is at the 27% and slash 24% level. So what it means that over here, this down move here in terms of momentum has been overstretched. So now how does the daily, okay, for the 4-hour RSI looks like, or even the 4-hour chart, because we got to actually take into account of the short-term strategy. So for sure, definitely this 14,380 will be a key support level to actually to watch or to highlight for this week. Based on the Fibo retracement analysis that I shared with you all. And the resistance to watch for this week will be definitely 15,540. So what is 15,540? It's the former swing low area of 3rd of December, 17th of December. After the break of this support level, you realize that how steep the price actually collapsed. All right. So definitely this is what I call a psychologically it has a significant memory of the market participant where a support level that's give way to a steep decline and it will start to turn into a meaningful resistance right now. And if you start to see a break above this resistance level, this is where we will start to see a more the odds of a more significant recovery will could actually take shape. Why? Because it overcome the level that actually triggered this current steep decline in terms of market psychology. So now let's quickly look at the 4-hour chart or this week's strategy that I'll share with you all. Okay, so definitely the key pivotal support to watch for this week will be 14,000 this level. Okay, 14,380. Okay, pardon me, there's a typo error here. Let me do it again. 14,380. So as long as 14,380 holds, we could see a first step to actually hit the intermediate resistance at 15,060, and a break above 15,060 should go above the significant level that I actually explained to you earlier at 15,540 that triggered the previous steep decline. And if you were to confirm it with a Fibo retracement level taken from the high of 28th of December all the way down to the low of last Friday, we could see this 15,540 actually confluence with the 50% retracement as well. Okay, and also all in all, right, if you could see the momentum is also getting exhausted as well on the downside by this we call it appearance of this bullish divergence signal on the RS 4-hour RSI at the oversold level. So indicating to us that the last 3 or 4 days of downside move appears to be overstretched, where the probability of a potential rebound seems to be increasing right now to take shape at least towards this 15,060 level, followed by 15,540. as long as 14,380 holds. But however, if we start to see a daily close below 14,380, it could take us down much lower towards the next support level at this level at 12,970. Okay, so now moving on, next will be the Hong Kong 50 index, or the Hang Seng index that we call it. Last week, if you could recall, we actually have a bullish bias 2 weeks ago. And last week, we have a resistance level for the expectation for the index to rally and hit, which actually hit at this 25,200, printed a high of 25,215. So what we could do over here is we still maintain that bullish bias, still looking for it to actually go up much further towards this 25,860, 26,220, 25,860, 26,220. So what's this level is in fact the swing high area of 22nd of October, confluence it with this expanding wedge resistance that is in place since the 18th of February 2021 high. And if you to draw a Fibo retracement level taken from the top of the 18th of February all the way down to the low of 20th of December, it actually confluence very closely with the 38.2% retracement. So support level to watch for this week will be at this 23,700. So as long as 23,700 holds, the key medium-term pivotal support holds, in any dips or in any decline, the trend bias still remains bullish for at least a push up towards retest towards 25,200. Then a break above it will actually hit this resistance level potentially at 25, may hit this resistance level potentially at 25,860 slash 26,220. So what is the key medium-term pivotal support? How do I define this key medium-term pivotal support? It's actually graphical of this former swing high area of 17th of December, 15th of December, 16th of December, as well as 10th of January. And if you to draw the Fibo retracement taken from the ongoing rebound from the low of 20th of December all the way to last week high, it confluence at the 61.8% golden ratio. So thus making this uh, support level a significant level to watch, and as well as significant and as well a level to maintain this ongoing bullish bias that is actually taking shape in the Hong Kong 50 index. So definitely a daily close below this level will take us down towards the long-term key support level at 23,000 slash 22,660. So why this 23,000 is very important? Very quickly, let's go to the longer-term chart of the Hong Kong 50 index. That could actually explain to you why this level is so important in order for the bulls to actually maintain their momentum in the longer term. Because if we were to look at this support level, okay, right for a while, okay, yes, so over here, okay, so this level here, okay, let me zoom in again. Connection is a bit slow. Okay, so this is the 23,000 level. So this 23,000 level tested and it rebound. And if you look clearly, the last 1, 2, 3, 4 weeks of price action, how does it react at this 23,000 level by shaping this bullish hammer, bullish reversal candlestick, followed by a positive follow through on the week of 20, on the recent week of 29th of Jan. Okay, here, there's a positive follow through after 3 weeks of bullish reversal candlestick pattern that is being formed at the 23,000 level. This is called a bullish hammer. Okay, so if we look at this 23,000 is important because graphically it's actually this turquoise green line. So what is the turquoise green? So this turquoise green line is actually the line that is actually taken from the low of the great financial crisis. Okay, over here in October 2008. Okay, October 2008. So ever since then, previous steep decline from April of 2015 to the low of February 2016 managed to help. January 2018 all the way down to the pandemic low managed to help as well. And most importantly, it starts to form a bullish divergence signal on the weekly RSI. And this appearance also took shape in the previous test of this long-term circular trend line support level over here that led to a rebound or recovery in price action as well. All right, so that's why this 23,000 is so significant in order for the bulls to maintain their potential, further potential push up. Okay, now very quickly, the next Asia indices that I share with you all will be the Nikkei 225 or the Japan 225 in short, that we call in our platform. So quickly, let's take a look at the Japan 225. It's a bit slow right now. Okay, let's wait for it to run. I think my apologies. It got to okay finally. Okay, it's a bit slow right now, the internet connection. Okay, seems strange. Okay, what? My apologies, guys. I need to allow me to reconnect the laptop, reconnect the platform again. Yeah. Okay, I'm back with the platform. My apologies for that slight technical problem or glitch. on my internet. So let's look at the Nikkei 225 or the Japan 225, we call it. So on the Japan 225, right, what we could see right now over here, since the high, okay, the high of 16th of Feb and 14th of September 2021, it fails to actually stage a bullish breakup above this key resistance level, which is at 30,716. And right now, it actually started, in fact, it's traded sideways. And last week, it did a push down to actually retest close to the range support, the key range support of 30th of August and 6th of October low. This, if you look at this previous, is the key range support over here at 27,500 slash 26,880. So all in all, what you could see, right, this is actually potentially it could be an impending major bearish reversal formation, which is called a double top, where we could actually indicate further downside, at least in the short term, if we start to see a daily close below 27,000, 26,066, 26,880 taken into the low of this candlestick on the 20th of August. Okay, over here. Okay, so a daily close below it should actually take us down lower at this 25,200 level. So once it's 25,200 level, if we to draw the Fibo retracement taken from the low, which is the start of this current major uptrend, 16th of March, all the way up to the high of 14th of September. Okay, it gives us at the 38.2% retracement. And you take a look, you could see that over here, the range support, the key range support actually confluence with the 23.6% as well. Okay, so definitely a, a significant levels, support levels to watch on this on the Japan 225. So in the shorter term, right, because since right now it's actually right at this key range support level, and also the daily RSI also start to shape a bounce up from a test on its oversold level at 30%. What it could mean over here is that potentially we may start to see another round of rebound again within this major potential major double top that is still forming, that is still taking shape. So in the shorter term, right, that means as long as this support level holds, we could start to see a bounce inside this impending double top formation. Okay, maybe I would say that in the shorter term, maybe it's right below this descending trend line resistance that is helped previous rebound since the high of 14th of September. So what are the key levels for this week is that we got to zoom into the 4-hour chart. So on the 4-hour chart over here, these are the levels to watch. So what's interesting on the 4-hour chart as well is that we start to see a a 4-hour bullish divergence on the RSI. Okay, which actually imply to us that the last couple of days, the last 3 or 4 days of down move has already reached a level potentially where is the downside momentum gets a bit of overstretch condition where we could actually increase the odds of at least a short-term recovery or rebound process in the price action. So how high can the bounce potentially goes? Some technical levels to watch is the short-term key technical levels to watch will be 27,910. So what is this level? Very clearly is the former swing low area of 30th of December, 10th of January, 14th of January, 14th of January, and as well as this level that was broken down and tested again on the 21st of January. Very clear, a clear level to actually in order for the boost to actually surpass it, break up to see another test on this former swing high area of 7th of Jan to 7th of 6th of Jan to 12th of Jan, which is a resistance at 28,830. And this level actually confluence very closely with this descending trend line that is in place since 14th of September. Okay, at this level as well. So if you start to see a daily close below 26,880, it could actually take us down much lower towards the next support level at 26,150. So what's 26,150? It's actually the Fibo projection taken from the high of 40 or set. Okay, pardon. Let me remove this. Taken from the high of 14th of September, project to the low of 6th of October, and to the high of 16th of November. Okay, you get close to this one time. So I did snap it properly to the high. Okay. at 26,150, which is a one-time FIBO projection. Okay, so overall, we could start to see a potential recovery, but not a significant one within this range-bound configuration of the that is forming in the Japan 225 as long as 26,880 key medium-term pivotal support holds. Okay, now the last one will be the German 40 index. Okay, so you look at the German 40 index, it's also trading in a very range-bound configuration since its all-time high that was printed on 18th of November, pardon me, on the 18th of November, 19th of November. Okay, 19th of November, as you all could see over here, recently tested on the 5th of Jan this year, but failed to have a bullish follow through, stopped at this 16,280 level. Then thereafter, it starts to inch down lower last week. So if you look at from the low of 6th of October over here, 6th of October, it starts to trade in this kind of sideways triangle, sideways, we call it a potential. It could be a ascending triangle formation that is forming due to the due to the appearance of two higher lows. And these two higher lows managed to bounce off at this trend line support that is in place since 6th of October 2021. Okay, so all in all, what you could see is that price action is now in the middle of nowhere, in the middle of this potential ascending triangle range configuration. And if you look at the RSI, it's also in the middle of nowhere as well. It hasn't hit the oversold or even come close to the oversold region yet. So if you look at the 4-hour strategy that we have for this week is pretty of a neutral stance. That means we are actually neutral between the swing low area of 20th of December and 3rd of December at 15,080 level. But one thing positive is that the 4-hour RSI has started to shape this bullish divergence on the oversold region. Similar, we call it observation that was actually seen in the couple of indices that I shared with you all earlier on as well. Then we have the upper boundary at 15,750, which is the former swing low area of 11th of January. Also confluencing with this descending trend line resistance closely at that is capping previous rebound since 5th of Jan 2020 high. Okay, so as long as the price action still remains within this zone over here, within this blue line, we're actually having a neutral stance. That means we're actually expecting to move sideways between 15,080 and 15,750, unless it could have a at least a kind of a daily close above 15,750, then we could potentially validate a up move to actually retest the current all-time high swing high resistance level at 16,280. Then, however, if you have a daily close below 15,080, it will take us down to the next support level at 14,800, which is the swing low of 6th of October 2021. So all in all, right, if you will start to see the technical configuration that I shared with you all is at least in the shorter term, price action last 3 to 4 days of price action seems to be a bit overdone on the downside over here, where we could potentially start to see at least a short-term recovery process in place due to the bullish divergence that is being seen on the 4-hour RSI in all the indices that I shared with you from the SPX 500, the Nasdaq 100, the German 40 as well, even though German 40 we have a neutral stance due to its unclear mixed elements and in the Nikkei 225 or the Japan 225, and the one that is clearly outperforming against the rest of the pack will be the Hong Kong 50 index. So do have a great week ahead, and I see you all next in my next video.